Welcome to Crude Awakenings. Today, Alan and Cody sit down in studio with Kevin Christian, founder and CEO of Covenant Royalties. In this episode, Kevin shares how he went from law, politics, and operating shallow Texas oil wells to building a minerals and royalties platform that has transacted across multiple basins and market cycles. This episode is brought to you by the Oil and Gas Asset Clearinghouse and produced by Rivery Marketing Group. It's time for Crude Awakenings.
All right. Welcome, everybody, to the Crude Awakenings podcast, our very first live in-person podcast. So no headsets today, with great guest, great friend, Kevin Christian from Covenant. And so welcome, Kevin. Glad you can make it, buddy.
Cody, Alan, really appreciate you guys. Thanks for the opportunity. And I'm just excited to have a conversation.
Excellent. Well, what we always try to find out is how did someone with the success that you've had find yourself in this industry?
Okay. Yeah. So I didn't get into the oil and gas until my 30s. And so I had to mess around with a bunch of other stuff that I had to fail at before I found oil and gas. And so kind of my bullet point background is that I grew up small town Texas. My dad was a football and basketball coach. My mom was a band director and one-act play coach, and we ranched on the side. So ranching, fine arts, and sports, and that kind of formed who I was. And Abilene Christian undergrad, and then played football there, and then went on to UT Law School. So I'm an attorney by trade. A lot of people don't know that, but I never practiced full time. Got into politics, and I was a failed almost politician. When I was 28, I lost an election for state representative out in Abilene, and after that, cold turkey quit politics, and got into business and worked with a lot of different companies of different types. I was kind of a consultant lawyer for a lot of startups. Did that through the Great Recession, which was a pretty tough time to be working with startups, and then found oil and gas really. Again, in my early 30s, the first deal that I bought was a little producing field in Coleman County, Texas, at 785 feet deep. It was producing 1.5 barrels a day, and the guy sold me on the fact that I could easily get it to 6 barrels a day, no doubt. And it was $95 oil back in 2011, 2000. Yeah. It was when I bought this, and so hey, I mean that's a load a month. That's a little company.
Yeah.
And so little did I know getting to that 6 barrels a day would be a lot harder than I realized. But I'm so thankful for that little field out in West Texas.
How many wells were on that field?
Oh, there were about 20 or so, and about half of them were equipped. And so, man, I just had to put them back online
So your ranching background, just growing up around equipment and things like that, and that must have helped you decide that this is not going to be a problem.
Well, sure. And, and what I didn't know then was that, if you survive very long in the oil business, that means you can tell a story.
Yes.
And so, and there's a lot of stories told in the oil businesses, and not that I was necessarily misled, but it was an education. I'll just say that. And so I just learned how hard it is to make grease, to get out there and really make it happen. And so I had an operating company called Stewardship Resources. And we bought production on a debt equity model at first, and thankfully our projects got more and more successful along the way. And then we started drilling. You buy a field, it's got a PUD, you either sell it or you drill it. And so drilled some wells down in Victoria County and kind of learned that process and sat out on rigs overnight. And I can remember driving from DFW down to Victoria in the middle of the night, and I was listening to the book Big Rich on the audiobook. And man, I thought I was going to conquer the world. Listen to that book on my way to the rig of a well that I was drilling. Man, I was.
It doesn't get better than that.
It doesn't. And those were blessed times. I learned so much, and those deals all generally worked out. And thankfully, we sold most of it before the downturn in 2014, or I'd have gone bankrupt. And so, just thankful, good timing there. And so then during the downturn, we drilled a couple more wells, but realized, man, you can't just change variables on a spreadsheet and pretend that this stuff still works. When oil's low, oil's low. So we stopped drilling, we pivoted, and in 2016, we actually found our first mineral deal. And that I've been in the minerals and royalties business since 2016.
Oh, that's awesome.
Yeah, I didn't realize you operated. I mean, I think you talked to me a little bit about it.
I didn't operate well.
Yeah. Well, that's it. I mean, operating, then going to minerals, that's the way to do it, right? It's a lot easier. I mean, once you understand operating, drilling wells, how everything that goes into it, buying minerals, you can evaluate them a lot better, right? You can understand what's going on outside of just what's on paper.
Absolutely. And I also realized what my own limitations were. There was just so much about the industry that I didn't know. And frankly, back then, I didn't have the right people around me to go to for advice in the field.
Yeah.
I had some great guys, but that were talented, but in the oil business, we rarely know our own limitations because we're all chasing opportunity. And so, I got into some fields where I needed other expertise I didn't have, and I didn't know it. And that was sometimes the best decision I made was to stop spending money.
Yeah.
And
just stick back and take a look.
That's right.
Abilene's an interesting place to learn too, because it's you have a mix of really, really great people that, old oil and gas families, old oil and gas guys, and you've got some you've got some slickers there. I remember my old partner Bill Fowler, who you guys buy minerals in the same place these days. But Bill, I remember was looking at he found an ad in the paper, the Wall Street Journal, and it was for some production out of north of Abilene, and it was an Abilene phone number, and it was be a Texas oil man, all this stuff. And so Bill calls up the number, and he's talking to this old guy, and the guy goes, "Bill, from your questions, it sounds like you know a lot about the oil business." He goes, "Yeah, I've operated about 20 or 30 wells." And he goes, "Let me just save us both a lot of time." He goes, "You wouldn't be interested in this deal."
Takes all types.
It does.
For sure.
So what kind of wells were you drilling there? What type? Was it the shallow wells?
I was drilling 7,000 foot vertical wells into stack pay Frio.
Okay.
And
Frio wells,
water drive,
Yep.
just natural completion, just perfect. And it comes at you.
Yeah.
And it was an experience. The first one we drilled, we had this PUD at 7,150 feet, and we came in up structure like 4 or 5 feet, right where we thought we would be, and it was completely wet. And we were just across some fault because there's so much faulting, and down there you might have 20 different potential lenses or pays you could get into in those wells.
Yeah, I've done
and
that
you never
before.
necessarily know which ones are going to really work out. And we just happened we came in right where we thought we would on structure, but it was across some fault and it was wet. But that said, there was pay up hole. And so there's a lot of bailout opportunities in those fields.
Yeah. The stack pay does help. I mean, you can make a well, you can break even with those wells.
But I told myself you'd be crazy to put $1 million in a hole in the ground. Who would ever do that?
Yeah.
And then I started doing it, which was crazy.
Yeah.
And then the first night where we had heaving shale in the middle of the night, and we thought we were going to lose a wellbore. That was when I was questioning that decision again. But luckily we didn't. It all worked out. But here we are. But frankly, I'm a lot better at minerals than I am at operating and drilling, and so this fits my expertise a lot better doing deals.
Yeah, for sure. I mean, it's been obvious what you guys do. So 2016 started minerals. First of all, what got you into minerals? How'd you start? And tell that story about it.
Well, I mean, we were trying to avoid abject poverty and figure out something in the downturn.
Yeah.
And so, and I joke about that, but I mean, I've been broke a couple of times.
Yeah.
Real broke. And it was what I needed. It was the humbling opportunities that I needed. That I guess I'm pretty hard headed, and God needed to hit me over the head pretty hard to teach me some of the things I needed to learn in this world was about stewardship. And so in minerals, we found this asset in 2016 that had gone through a failed marketed process. It was being sold by Ursa, if you remember those guys. They had a Denver management team and a Houston management team at the time. And these were a bunch of kind of wood-buying assets, and it was a big spread. And we had operations with my partner in some of the area, kind of in some Austin Chalk wells. So we had boots on the ground there with a pumper, and so maybe we should be the one to buy this deal. And it took 9 months. It was a hairy deal. In the midst of it, Ursa's management team split, and some of them went with one private equity, some went with the other, and they had this hairy asset they really didn't know what to do with. And we cleaned it up, got approval from their board, and bought it. And then in It took 9 months. And once we bought it, we split it up and sold it in 2 pieces. And we made really good money off basically flipping the deal, holding it about a month. And all of a sudden, wow, we're in the mineral business. That first deal was about a $5 million deal, and which is a pretty big first mineral deed to buy.
Really, definitely.
But it worked. And so that was in 16, and then we pivoted quickly. And in January of 17, we really launched out in the Permian, buying minerals in Howard County for the most part, and then expanded from there. And that was great market timing to get involved in Howard. And so what we did there was that we basically took about $150,000 of that money we had made from flipping that previous deal. And we thought we could risk that without our wives divorcing us, my partner and I at the time. We really, and we're not kidding. That was all the money we'd made in a year, basically. So we took 150 of that, and we said, all right, we're going to plow into the Permian and see what happens. And took a lot of risk, but 15 months later, we'd done 40 million in deals.
Wow.
And so that's really how the machine got going. At the time, we had a company called a Contender. So you'll see us in title out all over the Permian, Midland, and Delaware on the company Contender. And then we transitioned to Covenant after COVID.
So with Contender, I mean, so 40 million in a year, 18 months. I mean, how did that happen? I mean, a lot of the blessing was, in those times in the Permian, the values were climbing so quickly. You could buy a deal, hold it for 3 months, and it would increase by 30, 40% maybe in those 3 months. The market was maturing fast, in the Midland Basin. And so we were just right in the middle of that at the right time. And so before you knew it, we had $1 million, then $2 million of our own capital that we were risking. So we were just flipping these deals. We'd put deals under contract and we'd be selling other deals. And all the time we were just churning money. And before you know it, we were maybe churning, let's say maybe 4 million of money. And we just churned and churned and churned. We did all these deals with all these different companies.
It's beautiful to be on the, when that boom and flex, being on that shoulder, isn't it?
That's right. And then 15 months in, we took one meeting, and a group of family offices, really good Texas families, said, hey, here's $12 million. Keep doing the same thing. And so it was basically one big capital relationship, some really good folks.
And that was your first capital you took out of that?
That was the first capital we took in minerals, yeah.
So you did your own money. You bootstrapped it from 0 to 15 months, and then you got a $12 million injection.
And then that $12 million, we kept the same model of just churning. And so every quarter we'd be buying $4, $5, $6, $7 million worth of stuff and selling $4, $5, $6, $7 million of what we bought last quarter or the quarter before. And so 18 months into that fund, we spent with that 12 million, we bought 86 million in deals. So we were just churning and churning. And we had at this point, we had a big team, big overhead, and did really well with it. That was our first kind of real success, I guess you'd say. And then as fate would have it, our timing isn't always great. So then in spring of 20, and actually February of 20, we took a package of core Midland and Delaware Basin minerals to market with Bank of Oklahoma. So February of 20. And then by the time we got our bids came in on, I believe it was March 5th, which was a Thursday. And the next day was when Russia announced a supply war with Saudi. And people forget that was the first shoe to fall. And oil dropped from like 49 to 43 on that Friday. And then over the weekend, all the announcements about COVID and everything were happening. Mm-hmm. And on Monday, oil dropped to 25. All of our bids were rescinded. And then and now we're in COVID holding this fund with these assets with debt on them and figure out what we're going to do. And so.
Wow.
Yeah.
Yeah. Well, I mean, clearinghouse, we had to deal with a lot of that, right? There's a lot of those. You saw those, you heard. I mean, it was all the deals fell apart. They eventually got put back together. The ones who did put them together, kept them going. Obviously, did really well. But that was a tough time. So, what did you guys do through that period?
I on Sunday I was watching international news and I realized it was over. And so that Sunday, I put together a plan and I built a presentation, and I had our primary investors in our office the next Monday morning at 10 a.m. to just tell them the truth. It's like, this is gone. And sure enough, we'll open that morning at 25 and it was over. And so, but I already had a plan. I just moved quickly. And like I said, pivoting, right? We have to pivot as entrepreneurs. And so I had a plan. I was like, I wanted to keep my kind of primary crew in our office. And I just asked them to trust me with that. Like, let me keep paying these people. At the time, that was it. We don't have G&A backing now, which is a whole different story. But at the time we did. And so I said, hey, let me keep these people and I'll make this successful. Just give me time. And I'll take care of the bank. We'll figure it out. And we kept a skeleton crew, and it was a challenge. Went through a management change with my partner and I, and we ended up just shifting where I took the company kind of from that point forward. And we raised a little bit more capital. We did good work for our investors, and they introduced us to another high net worth investor. And we launched another fund, our first Covenant fund. And because you needed money. If you had money during COVID, you could do a lot. You can make a lot of things happen. So we launched a new small fund, and we started buying, and we would put those assets with some of our old assets, and we started flipping those out and just creatively figuring out how to create wins for our investors. And that's just what we did. We had the bank paid off by August and everything, and we were able to kind of carry from that point forward. It all worked out, but it was tough times. We were officing in Dallas, and they shut down. Oh yeah, everything shut down. It was wild, but no, I'm thankful for it. It all worked out. I think God showed a lot of faithfulness through that to our folks, and a little bit of hard work in it. And we're still in the business. So,
well,
for people that are not in the oil and gas industry, or especially the upstream buying and selling oil and gas, or drilling for it, or what have you, I don't think they quite understand the variability that this industry has, the cycle, the depth of the cycles. And I remember talking to a private equity sponsor we had one time in New York. And I said, think about what normal industries would be like if every one of their clients were now underwater, had no equity, their equity value had completely disappeared. They were all underwater. How do you think the economy would actually work? And I said, this happens in the oil and gas industry every few years, and it happens, and that has to be part of your playbook with regards to survival. And the United States today is one of the premier oil producers in the world, through just tempered by that kind of behavior.
And it can happen quickly, so quickly.
As you said, overnight. And just this auction yesterday, given Sunday's news that hey, the Strait of Hormuz is open, and you lose all of that like that.
It's amazing. And yet we're still here, gluttons for punishment. So,
we are.
Well, and you've seen a lot more ups and downs than I have through your career. But I've been in the business since basically 2011, 2012, and I saw the crash in 2014, and then obviously COVID, and then we've seen like with the natural gas market. I mean, it's just been all over the place. I think about in fall of 22. We put assets under contract that were natural gas assets before Thanksgiving that were closing and did close in the second week of January. And, gas dropped from $6.50 to $2.
Oh yeah.
That last week of the year between Christmas and New Year's. And we still, we had to honor our word and close those assets. That was hard. But what are you going to do?
Absolutely. So, well, and yeah, this is not a business for the faint of heart. That's for damn sure.
It's all about perspective, I mean, when you look yesterday, or let's say this time last week, about hedging, prices thing, you could hedge it, but you don't want to hedge. Yeah, I mean, prices are looking good. You see you can always make yourself believe either side of the coin. Mm-hmm. And so, like in 22 with the gas, you could have hedged $6-7 for 12, 18, 24 months. But it's like, that just seems like $5 even. I mean, it just seemed like, well, $5, the way things are looking, we're leaving $3 on the table in MCF. And so when you look at all those things, there's always in our business, there's always a way to there's always a way to pivot. There's always you can that downturn can turn into your upturn for the because of what happened the next couple of years.
Sure.
But there's also a point where in our business, I'm sure you've seen this, where there are decisions you can make that can really, that can change your trajectory, like putting a hedge in or sticking with that deal. Mm-hmm. And that deal has development, but because you saw the upside outside of just the temporary, I think where you see a lot of people fail in our business is that sprinter mentality, where they're going hard and fast. And so what I've learned in the same cycles you've been through and is always, it's a marathon. Always take your process, but as long as it's, there's all the reasons in the world to believe in it, follow that process and be patient and take that marathon kind of approach. And it sounds like that's what you've done.
Well, we're just thankful to still be running, I guess you'd say. But yeah, I've got great partners, and Cody, you definitely know my partners. My partners are Andrew Wilmot and Graham Cox, and so they're my two partners. Drew runs Drew. He runs all BD for us, and his email isn't a Covenant email, so people always ask about that. But he's had his Purposed Ventures email going all the way back. Frankly, he and I had a consultancy called Purposed Ventures back during the Great Recession. And so that goes all the way back to those days. And Drew loves to tell the story that I actually fired him as my partner when I went into the oil business. And we got into the oil business separately and came back together years later. Stayed best friends.
But he doesn't use an email?
He look at his email.
I never noticed it. I didn't notice that.
PurposedVentures.com. Everybody send him an email, spam his email for me.
Okay.
But yeah.
Please do.
But yeah, he's had relationships that go so far back. He's a relationships guy, as you well know. And then Graham runs land for us. He's been with us since 2003. Graham came on when we were doing a divestiture to Dorchester. It was a big, challenging process. We were pulling together a lot of partnerships that we had built over the years and putting all these assets into one bucket to sell or to exchange with Dorchester. It was a great trade. I'd like to think it's a great trade for both sides, and love those guys at Dorchester, Brad Ehrman and those folks. But it was a complicated process, and I needed a guy really to lead from our perspective from the land side, and brought him in to do that. And by the time we closed that deal, it was clear to Drew and I that Graham had to be our partner. So here we go.
That's great. With regards to it used to be pretty simple. Banks used to loan. There was some private equity that came in. But then during the last couple cycles, there was a lot of money waiting to pounce, to pick up what they thought was going to just be pieces in the ground when it hit a low, because that's the way it's always happened, right? And banks kind of learned that the last thing that they wanted to own was operated working interests, where they had no interest in going out in the field and operating. Anybody who's ever operated a well knows that it is a house of cards just waiting to fall down, and you got to be swapping cards out all the time. And that banks are not good at that. They can destroy production value so quickly by foreclosing. So, what is your thoughts in terms of just the equity guys, the bank guys, or the debt guys, and the flexibility that they're showing, or the non-bank, because banks have a lot of rules around that, but just how creative they've gotten with regards to this business.
Wow, it's a big question. I don't consider myself a finance expert at all in our business, and we've been a deal shop that became a heavy underwriting shop, but we've really never had a lot of debt, for example, and we've never taken major private equity, which a lot of people don't realize, because we've been out there, we've moved a lot of acreage, and it has been a blessing in lots of respects. Since my partners and I cover our own G&A, there are some quarters, some lean quarters when we're like, maybe we need to shift strategies. But no, it has been a blessing. We've been able to work for ourselves, frankly, and control our own destiny, which has been great. But I think it's interesting on the finance side. I think the industry is trying to find its footing after all the changes with COVID. And you're right, definitely those that had dry powder coming out of COVID. I think of like a U.S. Energy, Jordan Jason, and what he's been able to do with growing that shop, being able to buy great assets coming out of COVID, and then just dramatically expanding their ability to bring in capital and deploy capital. There's some of these great success stories like Jordan's. But it's been a really interesting mixed bag. And then you had, ABS, and that's the big thing now. We've got some guys, and we've done some work related to ABS. We've never done an ABS deal, but I think that has the potential to now do wonders for our industry, and or it could go the wrong way. Sometimes when debt's too cheap and too available, then industries can lever too far. And so we've done that. There's certainly examples in real estate, et cetera, that we should learn from. But I guess I don't really know where we're going to land. I do think it's exciting to see a lot more capital becoming available. And I think we're getting out of the ESG days where just firms, and whether it's endowments or banks or what have you, we're trying to completely get out of oil and gas and divest. I think a lot of that has subsided, and now folks that need yield are coming back and saying, yeah, these are great assets to own. I think the most interesting opportunity from a financing perspective is in aligning with AI. And as we come in there, and I do see this big disconnect. There's all this capital going into AI, but there's not nearly enough capital to build the infrastructure or the fuel that the compute's going to require. And so that's why a year ago we transitioned and we started buying almost completely nat gas. And we're buying oil assets here and there as well. But for the last year, we've, for the most part, just bought nat gas, trying to align with the needs and demands of AI.
Smart. So are you focusing to be close, buying assets that are close to announced infrastructure build-outs, or the big centers, or you?
Yes, but reality, if you're buying good natural gas assets, especially in the South and Texas and Louisiana, that infrastructure is coming to us.
It's coming to us. Yeah.
So like we're heavily invested in the Western Haynesville. We've put together a really great position there over the past year. And so we'd bought there a couple of times and sold down to some great trades, but we put together a really nice position over the last year there. And now you had a couple months ago, U.S. and Japan, and along with Comstock, announcing a $16 billion new generation facility that's going to serve data centers in that area, all served by the gas coming out of the Western Haynesville. There's more and more of those announcements that are going to come.
So with regards to that, just this brand new market that's expanding, that we don't really even know. We don't have a clue how big it's going to be. And then the more and more infrastructure being built out for LNG, it's kind of saving natural gas. We're starting to see the impact of it, right? It's not tracking oil or being separated as oil's ugly stepbrother.
Well, I would like to hope that $3 to $2.80 is now our floor. Yeah. So let's knock on wood and pray that that's the case. I don't want to see any more nat gas prices with a 1 in front of it.
Ooh. Yeah, isn't that wild?
But yeah, and it's interesting for us from an underwriting perspective. We can underwrite a lot of deals at $3.50 gas. Even at $2.80, it gets really hard. And so that's how tight I think the natural gas mineral market is, because these mineral owners, they're not going to reduce their expectations if gas drops to $2.70, right?
Right.
And so, but to get deals done, definitely in the threes, there's a lot of deals to get done.
So and there's more and more people that are trying to get into your business in general. Maybe not the same strategies or what have you, but how do you stay competitive? How do you differentiate from just? There's a lot of smart money and there's a lot of dumb money coming in.
For sure. I think we differentiate by, number one, we've just always been known as a shop that's willing to work. We work hard. We build a lot of relationships and we invest. We do a lot of BD, a lot of travel, and a lot of sponsorships. And so you'll see us out there a lot doing things with our friends. And it's just because we believe in the relationships and that we know good deals will come from those relationships. If we take care of people and we invest in people, then over time, it's going to mean deals that come into our shop. So that's number one. And I'd like to think we are best in class in how we go about building relationships in the industry. And then number two, I would say, we have a mix of ground game and just a preferred broker network of guys that know, especially since we're not private equity, we can be very flexible with how we close deals and structures and how we pay people. And we're happy for brokers that deliver good below market deals to really do well and make a rip. And like, we're happy for them. If we can underwrite what we need for our investors, then we're happy. And we're happy for brokers to do well also. And then, as we expand now into kind of just this new generation of what's required to be a successful business, we're also adopting and building a lot of our own AI. And Graham in our shop is actually on the forefront of all that. And he would say he's just a landman, but he's as forward thinking as anybody out there. In fact, he was a expert speaker on a small business panel at Enverus's Evolve conference last month.
Yeah,
where he was brought in to talk about AI and what he's developing. We're doing a lot internally, and I know I have some good other friends that are leaders of other shops that are also just believing that you've got to adopt these new tools, or you're just not going to be relevant. And so at Covenant, we've chosen to do that, and we're building some of our own. We're talking to everyone that's got an off-the-shelf product as well to see how we can implement, and it's going to change a lot of how our industry works.
Well, yeah, I just from knowing you guys, knowing Graham, I've got to peek at what you guys do, what your AI already does. And
Sure.
I haven't spoken to anybody else in this space that does everything they do. I mean, they basically offers that are under a certain threshold that basically does it itself. They don't have to touch anything. They just have to review it. I mean, there's so many things that they do. Also reviewing deals, they use AI to come up with kind of the best places. Like you take the information you get from Embarrass or wherever, satellite data, all that. They take a lot of different information. I don't know what you're comfortable sharing, but I've taken a peek at it. It's very impressive. And I think I was going to ask you that leveraging AI, leveraging technology. I mean, you guys do it really well. I mean, that I've been more impressed with that from you guys this last year, learning more about that than anybody. So yeah, I think that's obviously a huge advantage.
Well, all credit goes to Graham.
Yeah, I see that.
Trust me, Drew and I are not tech savvy leaders in that regard.
He geeks out on it,
but he does.
Yeah.
And honestly, he had to pull me along. I was a slow adopter.
Yeah.
And I say that things have moved so fast. Over the last 6 months, I've become a believer, and not just that it will work, but that it must work. And to be relevant, we're going to have to figure it out. And I would say we're still very much developing. Like, for instance, we will use AI to check our underwriting, but we still have engineers in-house that are doing our actual, hardcore PhD win underwriting. But now we're checking things with AI, and it's one of our checks, our CYA, to make sure that things are coming out correctly. And over time, and like now we're doing the same with title.
Yeah.
And so we're starting to look at different AI solutions with title. And with that, speaking of that Evolve conference, we're big Trax users. So I've got to talk about Trax and how much appreciate what Ashley has done with that company and their folks over there. Trax has been our exclusive broker for 3 years now. So we've been using Trax for a long time. So the fact that they're now partnering with Enverus is exciting. So we're big Drilling Info users too.
I'm glad to hear that.
Yeah.
That's been a benefit of when we built Enverus was we came to the conclusion that we would never be able to build everything that we wanted to build. But if we could create a platform where we could partner with people that were coming up, building these things, and opening up our market space to them and our channels, then that would behoove us. Just the way you have those relationships there. It was like because they have these we have those we built these relationships, and I don't have any part to do with Enverus anymore. But I thought it was by getting them into our ecosystem, then we would have a great advantage in terms of being able to buy them if it was really working. Mm-hmm. And but there was no obligation for anybody to sell to us or anything like that. It was interesting. And in your business is definitely a numbers business. You have to look at a lot in order to close a little. And And AI is just, anything that allows you to go do 10 times as much is kind of magic.
Yeah, it's what we all spend our time in our businesses before this, always will, making our business, it's always making it more efficient, right? How can you become more efficient? I mean, it just does it. I mean, it does all the things that make you efficient without having to, go through the years and processes and, all the things you have to do. So I think it's great. What do you guys use? So you said Track's your broker. What do you mean by that? How do you guys use Track?
Yeah. So, we're an acquisition firm. We're buying minerals all the time.
Right.
So anytime we buy minerals, we're going to hire a third party title brokerage to actually run the title for us.
And Trax runs title.
That's right.
Okay, I didn't realize that. That's great.
Yes.
I knew their technology. I know Ashley, great guy.
Yeah. So Trax is a technology company.
Okay.
But in order to get their technology out into the hands of customers like us, their vehicle for that was having a really high quality brokerage. And so you can just hire them to do broker services, and they'll deliver you an old school run sheet, an old school MOR, just like anybody else can do. But also they will deliver it in their software, and it's a hook to be able to get people to start using their software. And I think it's obvious now. It was a successful business model.
That's great. We need to get Ashley on the podcast.
Oh, you do for sure.
I love that. I need to know more about Track.
Yeah.
That's cool.
And it's really important that, frankly, if the software was great but the brokerage service sucked,
right,
then their company would have failed.
Yeah, you have to have both sides.
It's a both and. You have to have both. And like if Graham were sitting here, he would just be singing praises about, he describes it as our lead land guy. He would say Trax, the software, just puts his brain for land on the screen. And just everything is visualized in such a cool way. It's just like as a landman, he sees it in his brain. You think about those old school flow charts and stuff that guys used to build. Trax does all that automatically.
Yeah.
And along the way, as a business leader, what some of the things I really like about it are, they have dashboards and ways to track everybody who's working there, like the landmen that are actually doing the work. So if they're billing for a landman Friday and they're really, at the bar instead of in front of their computer, the system will show that. And the client can see that if they want. I don't have to log in and look at that because Kristen and Peter and the folks that over there that do stuff for us under Ashley, they're watching it. But there's an auditing system that's kind of just built in, which is just great from a business perspective when you think about investment. Yeah. And all that. And I also love, like, whenever they're building out these things, if you're just a landman building a spreadsheet, you can forget to put in a file date and just move on to the next line item. And before you know it, you've got this incomplete spreadsheet. And Trax won't let you do that. They have to complete their work to move forward. And then once it's in their system, no one ever has to look at that document again. So
it's perfect.
Like once it's there forever. And so when that volume and page comes up on a deal you do 3 years later, it's already been reviewed. You don't have to spend time reviewing it again.
Well, I imagine when you're think of how much value that brings when you're going to divest as well. If you've already done all of that, you're essentially delivering it with a title opinion, with title, right?
Oh, for sure. Yeah, absolutely. And it's kind of funny how we got in bed with Trax was we used to, a few years ago, we were buying in 3 basins. I had a different brokerage service working in each basin, and they were all doing some good work. But we were trying to manage multiple relationships, getting a different type of product in from each broker, depending on which basin deal we were closing that week. And Graham was on vacation, and I was closing a deal, and it's 1 a.m. The broker had gotten us the work late. I'm supposed to close it the next day, and I'm looking at title, and I'm an attorney, but I'm not a title attorney.
Yeah.
And so it's dangerous if I'm having to look at the run sheets. And I kid you not, 1 a.m, I find 2 defects. It was buying a deal. The deal was about a $1.2 million deed we were buying. And I found 2 defects that were worth over $200,000.
Wow.
And, so I couldn't believe it. So the next morning I called my seller, and thankfully we were able to delay closing week, and I hired another brokerage to run full title again to make sure they got it right, because I didn't trust anything now that I was getting out of this product. And I called Ashley that day and said, because we had already done a pilot with them before that was successful. It's just our capital at the time had preferred brokers that we were working with, which was fine. And I said, look, give me a deal. I'm going to make you my exclusive broker, and let's take off and run. I just want one relationship. So I got one guy can praise and one guy I can blame, basically. And he was like, okay, gave me a great deal. And, they've run a ton of title for us since.
That's fantastic.
Been great partners, but yeah, so multiple basins, it's just been good. And so we're excited for them and their future.
Where will you not buy minerals?
Well, so the cool thing about not being private equity backed, we can buy anywhere. I mean, so we like to say we just chase value.
Yeah.
If there's value and opportunity, we're going to be there. For instance, I didn't buy a thing in Oklahoma before COVID, but then during COVID, because of how many sticks, a lot of those deals were underwritten at before COVID. A lot of those guys lost their funding because of COVID and because of other reasons. And so, there just wasn't enough capital available to buy good Oklahoma deals after COVID. So we bought a bunch of stuff in Oklahoma for a while. And then, but before you know it, 6, 8, 10, 12 months, a lot of those good Oklahoma mineral bros, they get another capital source, they get more funding, and all of a sudden, bam, guys get more funding and prices go back up.
Yeah.
And we were like, we're out. And so we'd like to chase opportunity like that. So we've acquired in 10 different states, just depending on the cycles.
The doors open and doors shut.
And we just try to go where there's real opportunity. It's got to be value you can underwrite. And sometimes, it's gotten really hard in the Permian the last few years. Mm-hmm. So we really haven't bought much in the Permian in the past year. But also we get into new and emerging plays. Like we got in heavy in Southeast Dawson at just the perfect time. I already mentioned we were in heavy in like Howard starting out in 2017. So we were heavy in Southeast Dawson. We got in January of 25. We deployed a lot of capital for about 9 months, and that's when all that Dean play was taking off under Birch and Hibernia and those guys, drilling 1 million barrel wells in the Dean. And when we started, I think 2 of those units had been permitted, and 9 months later, like 90% of the acreage we bought had been at least permitted. I mean, it happened fast, and and it was a difficult decision we made to stop spending money. But by that point, underwriting got so difficult because everybody else, the money started flowing in. And so, same thing with the Western Haynesville. We feel like we're still early being aggressive there.
That's interesting. What are your thoughts on the Rockies?
I don't have much expertise there. We've only closed a couple of deals there. And, part of it we've stayed out of because of regulatory issues and this, that, but mostly it's just knowledge base.
Right.
We're already trying to be experts in a number of different basins. And if I had the right partner that had the right deal, we'd absolutely buy there again. And so a lot of it is just if the right group comes to us and we can underwrite it, then we'll do it.
Well, I was surprised at the auction yesterday how much action the Rockies minerals were getting, even in Colorado, and which was not been a hotbed of interest lately. And it was. I thought it was. Sometimes you see something coming up and you can't figure out. How somebody sniffed something out there, and I thought that was pretty fascinating. California? Would you ever buy in California?
Would probably never buy out there. That'd be my guess. But we bought in the Appalachia. We bought in North Dakota. My partner Drew did a lot of work with Riverbend up there doing non-op stuff, and so we have some great relationships up there. But we are deal junkies, and we've become a technical shop just out of necessity. And we're right now we're heavy in the Shelby Trough, the traditional Haynesville in Louisiana, and the Western Haynesville. Said we're doing some new work in the Permian we're pretty excited about, but really we're just looking for deals that work. We have a small public company that we're buying with now. That's not a mineral company. They're just building a mineral portfolio, and they asked us to do that for them. And so we now have better capital than we've ever had for PDP ducts and permits in near term. We've traditionally been mostly an upside driven buyer. But now we've got 2 buckets of capital, one chasing upside and one chasing cash in near term. So it's given us some flexibility.
And not been seduced by non-operated working interest?
Man, I probably have the least expertise in our shop on non-op, and we get excited. We love it. I'll try to get into it, but I haven't been able to build a model around it.
Yeah.
And frankly, there's just some other guys that are good friends of ours that are so good at it. And now that's gotten so competitive. It's probably more competitive even than minerals now.
I mean, it's gotten more. I don't know about that. Minerals are still that's where most capital is. You know, if you're at the auction, every mineral deal is going to be super competitive.
Yeah, for sure.
A lot of non-op deals are, but not like you don't know all of them are, right? Yeah. So minerals. So I would say, but the gap in the last 2 years has really shrunk.
Yeah, for sure.
4 years ago there was the gap was as wide as it can be, but it's shrunk and it is more of a people are seeing the value in that because there's more capital that's on the mineral side.
Yeah.
Than, there has been, at least historically.
When we've done non-op, it's been mostly just targeted AFE deals, and we're happy to participate with our friends and get involved. And
those are fun.
Yeah.
Especially if it have to be fun for you now, understanding that you're, operator, wildcatter, all that. I mean, it's fun.
Like I say, the working interest side of it is not where my expertise lies. Yeah. So again, I'd rather trust a friend.
Yeah, that's a good point. So what's the future? So now you have all the right people, technology. You're going hard. I mean, what's the future look like for Covenant?
We're figuring that out every day. I will say this: we do have a great team, and I'm real thankful for our group. They work really hard, and they're talented. And we've got some good capital partners. We've never had major capital within the shop, and people. So whenever we do a big deal, typically if it's too big for us, we may buy a quarter. We'll bring in a large friend of ours to maybe take 3/4, or we'll buy an eighth, we'll buy 7/8, or what have you. And that's allowed us to move around big deals as if we had like major equity backing. So it's interesting. We haven't raised any money in minerals. Like I haven't taken a meeting to really try to. We haven't launched any kind of PPM or private offering or anything in years. And I mentioned even going back to 2017, 18. It was one meeting that a guy asked us to go to, and that was our first funding, and then that just became another partnership, and then it became another. We just do successful deals and trades and partnerships, and then we'll get one LP that'll come and say, "Well, I just want to do your next deal," and we've just moved forward like that. We've never gone and raised capital, and so we're trying to make that decision now, Cody, if we're going to actually launch a raise or not. These partnerships have served us really well and allowed us to be flexible. But that said, we've had moments when we've had great deals, and our deal flow outpaced our capital. I can give you, for instance, in 22, I think, Mesa, they're a great shop. And know those guys. They're fantastic, and they're great gas buyers over in Louisiana, and they became great buyers in the Permian now. They're just fantastic guys. I think one of the hardest working private equity shops that we know and have ever done business with. But yeah, so Josh and Darren, those guys, they do fantastic. So when they got into the Permian, the first deal that they bought was a deal that we had under option that we could have bought. We were in line ahead of them, had it under an option agreement, but our capital at the time just wasn't the right fit for that asset. So we didn't get it closed, and sure enough, they came in, they bought it, and I'm happy for them that they got it done. But we had a lot of those over the years where we didn't quite have the right aligned capital. Yeah. And even though we were doing well, we just didn't have the right aligned capital. And then a buddy of ours would end up getting the deal bought. And so our over time, our underwriting has continued to be proven up over and over and over again, which I'm thankful for. But we still have never taken that leap to go get major equity. But we'll see. We'll see what happens in 26 and 27. But
and you guys office in Fort Worth?
Yes, sir.
So what's the benefit of being in Fort Worth? Other than apparently it's just an hour truck ride by a landman, according to the TV show from the Permian Basin.
Well, I did that trip last week. It's a little farther than that. Yeah. but no, Fort Worth's a lot more laid back, and that's for sure. But that said, I think, goodness, we just do business with folks everywhere. I live over in Keller, and I've got a little bit of acreage with a couple of horses at the house, which is kind of fun. And so I get a little bit of that ag piece that I can still have more over in Fort Worth than I can over here. But no, there's just a lot of good folks. There's a lot of great folks in the industry. At the end of the day, one of you guys said it. It's really about the relationships and the people, and it's an industry full of great people. There's some scoundrels, of course, but there's a lot of really good folks that want to do deals where everyone prospers. And so we're just trying to reflect that and just do good deals where everyone wins. Because if we do one and everybody wins, then we'll do 20 over time.
I agree with that. I mean, it's a great industry to grow up in because you definitely get to see win-win deals and people pushing for win-win deals, and that's not the case in a lot of different industries, I guess. There are certain industries where everybody's trying to take the last bit of silver off the dime, and that's never been the case in the oil and gas side, especially kind of in the drilling, because you're all in the same boat,
Yeah, I think it can get cutthroat in minerals, and we've seen prices skyrocket, and there's definitely scalpers out there that don't care about underwriting. They're just can they make $500 or $1,000 an acre? They don't care whether the investors are going to win or not. But you kind of push those guys to the side. They reveal themselves eventually, and there's guys that want to do good deals, and and also like you have the proliferation of all these now public marketplaces that has just exploded since COVID. And that we think that market has completely changed. What Cody's doing with Clearinghouse and the others that are out there. Like before COVID, there was a great advantage being a privately marketed deal. And post COVID, it's just different now, and it's like, we've over the years, we've done maybe 400 million in transactions or something like that. And I probably on one hand, if not two hands, how many of those have been publicly marketed, which almost everything we do is private, both buying and selling. Mm-hmm. But yesterday we did a great test with Clearinghouse. We bought some stuff from y'all, but hadn't marketed anything with y'all in years. Yeah. And we marketed 6 assets. We got 3 of them done yesterday. Well, I think we'll get the other 3 done. Yeah. And so man, thank you. Yeah. That's great. But I think it's a testament to just how the market has changed. Mm-hmm. And now there's just an expectation that just because it's marketed doesn't mean you're necessarily paying a premium. You can pay a big premium in a private deal. Either way. It's a premium no matter what. It's a black box when it's that as well. And so it's just a different market.
It is.
Go ahead.
If you were there are people that are still, there were buyers before COVID that were hesitant, or before DEI that became, or SG, what are the ESG that were very very hesitant about coming back in. And Cody and I were talking about that with regards to, there's right now in some parts of what used to be considered the traditional patch, if you're an operating company and you have some operations in there, then you're going to be the one that has the gravity around you to be able to capture a lot of operated working interests that are coming around there, just because of there's some dynamic changes in there. So and often be able to be the one that can get it at a lower cost because you've already got infrastructure in there.
For sure.
Yeah, right, you said before COVID, after COVID, let's call it 6-7 years ago. You talk to folks and they would only sell off market. That was the thing you heard all the time. I always argued about it. Hey, listen, that's fine, but I think this is the best place for everybody gets to see where it's at when, there's lots of reasons to do it. Efficiency is one. But yeah, now the last couple of years, you don't hear that anymore. You rarely hear someone say, oh, we only buy or sell off market. I think that perception has changed, especially in the mineral game, which is good. Mm-hmm. It's good for the industry.
For sure.
Yeah, it's good for everybody. The more of the marketplace you have, the more deals can get done, the better deals can get done. I mean, I like we know always the best deals, everybody wins, right? The seller yesterday, you bet you're a buyer, but you're a seller. Yesterday you won, and the buyers got a good deal. They're the right deal. Yeah, when everybody wins, and that's what makes this business keep going, because you you'll be buying something from one of them, I'm sure, one day in the next few years, and it'll be a good deal for you and a good deal for them. But I'm glad to hear that you guys enjoyed the process yesterday.
Oh yeah.
A big part of any success, whether you're off market, on market, whatever side you're on, it's, being a real seller, being somebody who really, understands, that, you guys understand the value of your deal and what's a good deal and what's a bad deal. And being able to transact those deals isn't easy. A lot of people can't do it. They can't let go. They can't get off of a price. And so you guys always being able to evaluate and be flexible it's great working with sellers. If every seller is like you guys, it'd be an easy business. But that's what I love that yesterday. I went in and I didn't know, talk to you. What do you think? Oh, you're great. Cause you never know. Some sellers are disappointed if they don't get, the premium dollar PV5 on a deal, and you guys understand what the real market is. So that's awesome.
Well, we certainly try. And I think it's just different. It's not better or worse. It's just different as well when you've got a lot of your own capital in deals.
Yeah.
And, there's some guys that are managing $1 billion portfolios and they have their own challenges and problems and opportunities. And, but they go buy a $2 million deal, let's say, and, their management piece of that is going to be really, really, really tiny and spread across a whole big portfolio. But, when you're going and saying, hey, yesterday we were sitting around, actually the 6 assets we were selling. It's like, okay, which one of our partnerships owns these? And I think 5 of the 6 we own completely internally.
Okay.
That's our money. So it's just, I was looking at Drew. Hey, what do you want to do? Drew, you and I own this one. That's it. The asset in Panola, Drew and I own it. Owned it for maybe 4 years. Really great asset. What are we willing to take? We just got to make a decision, and it's different when you go buy minerals and and it's your money that's buying it. It's just different. It's just a different equation when you're thinking about these things. And so, but yeah, no, it was great. You guys were great partners. And, we've now done, last year we did a big sale through Indigo Energy Net, and that was a big package sale, and that was successful. Mm-hmm. Interestingly with that, we actually had an off-market offer before we went to market. So from some great friends of ours, but they were friends of ours, and that's tough for equity to maybe trust that you're getting the right deal from your friends. I understand that. It was, we told them it was a great offer. The investment bank told them it was a great offer. But still, we went to market, and 5 months later, we closed a successful deal to our buddies. They won the public process as well, and so we've been around the block. We'd like to say we've done this so many times now. We know who the best buyers are generally, and there are times when the public markets though will bring somebody out of the woodwork. But it certainly will give, clarity and honesty to the process. Mm-hmm. And I appreciate that from an investment perspective. And so, but yeah, no, it was fun working with your guys. They were great.
Yeah, likewise. Good group. Good to have you guys
and
here.
Hopefully out there, they're still working on getting those last 3 negotiated.
Well, that's what they do best. That's what kind of the same thing you have. The big part about Clearinghouse that makes it separate is the work, right? They hustle, they work deals. It's not a lot of groups, there are a lot of good groups, but a lot of groups don't. Once the deal doesn't happen, they wait for someone to come to them. Our guys go to it, and they go with urgency, and they'll work here till midnight, whatever's necessary to get a deal done. And that's what it takes in oil and gas. And that's the best part about the COVID era. This 2020 through to live, to survive, especially being in the broker side. To survive, you had to do that. And so everybody, that's the whole team's built on that. You had to do that. Mm-hmm. And so all of our team that started or were there then, those guys that's the culture now. You had to do that. Where before, Clearinghouse, Energy, those companies, they had so many deals coming to them, and, they would sell the ones that were easy to sell, and so that was the difference. The difference today versus 10 years ago is that, that work that's what those guys do, because not all the deals are going to get done at the gavel. You've got to negotiate them. You've got to put hard work in, whether that's on the underwriting, the data side, going through and figuring out what you need to figure out, or just reaching out and making sure and hustling the deals with the buyers, because buyers are, we're all buyers, right? When we're a buyer, it really takes someone to lead the horse to the water. You have to have that
for sure.
If you didn't, it'd be done at the auction, right? Already. So. But anyways, appreciate you guys. Appreciate you being on this, learning more about you. That's really cool. One day we'll have to do one with you, Graham, Drew. That would be fun.
That will be a circus.
That would be fun.
That
would be a
circus.
That would be fun.
Yeah.
And did you grow up in Abilene?
No, I was born there, but my dad being a football coach, moved around small town Texas a lot, and it was just one of those coaching families that moved a lot. My wife grew up there, but I graduated high school from Roby, which is a little cotton town northwest of Abilene, about an hour in Fisher County.
Yeah.
And but yeah, I moved out kind of all over small town Texas.
Was that six-man football?
It was 11 man at the time.
All right.
Yeah. Things have changed out there though.
Yeah.
Well, it's God's country.
For sure. And now it's just, talk about, AI development. There's a bunch of data centers going in around the Abilene area, Fisher County,
yeah.
and Snyder, and that whole area. There's a lot going on, a lot of opportunity.
Well, good on them. I hope it. It seems like there's all this resistance to these AI data centers.
Yeah.
And I was like, it was a little hard for me to get my head around as to why there was so much resistance, because they said it was going to raise everybody's electric prices, and it was going to take all the water. And I couldn't really figure that out, because using water to cool something is a closed system. It's not an open system. It's not like watering a golf course. What are your thoughts? Why is there such a resistance to that?
Well, we've seen this especially in Texas a number of times. And so I mentioned when I was in politics, I was an appointee of Governor Perry, and I was on his jobs team back in the day. And we were great at creating jobs and recruiting companies from California to Texas. In fact, we were a little too good at it, as we now are realizing. But back in those days, I worked on a lot of the early wind farm stuff and helped draft some of the legislation related to that, and got to work on a lot of those projects. And there's purists about rural Texas that are always going to be purists about rural Texas, whether it was the wind farms or the Trans-Texas corridor, which everyone has forgotten about, which was Governor Perry's big plan to actually build a massive highway and train infrastructure back with NAFTA to move goods through Texas to the rest of the country. And it was a grand plan, and couldn't get the farm bureaus of the world and the ranching associations on board. And so there's a lot of that same stuff. These purists who want to keep rural Texas pristine. But the reality is, having done a lot of economic development in rural Texas and having lived in a lot of small towns in Texas, they're dying on the vine. It's really, really tough. The equation is incredibly difficult to keep those communities alive. Mm-hmm. And we used to have this frontier mentality, and that's how West Texas was developed. It's certainly how oil and gas industry was developed. But the Americans we'd push west, and Texans would push west, and had this frontier mentality, and that's what established rural Texas. But it's really changed. Now it's kind of a not in my backyard, and we're happy for big development in the Highland Parks and the Collin counties of the world to help fund our schools and all this. Like, all the development, all the capital is elsewhere, increasing taxes that's helping support our little rural communities. It's changed. And there's some communities where you can tell when their leadership is willing to pull themselves up by their own bootstraps and say, no, we're going to bring in whatever industry we can, knowing it's a challenge. And then there's others, and they're like, well, not in my backyard. And it's unfortunate, because it's the school districts that suffer when they don't have a tax base, and when there's no jobs for young people, and you can't recruit your best high school graduates back to live at home. And those. So you may be a big landowner and really, really appreciate your pristine environment, but the reality is, what are you leaving for the next generation in your community? And we have to have development to do that. And these AI data centers are now a godsend, frankly. It should be done responsibly.
That's the way it seemed to me.
But now you're talking jobs, you're talking capital investment, you're talking all of this opportunity for rural Texas to keep those communities alive. And so I would just challenge those farmers, those ranchers and communities. Like, I feel you. I appreciate you. I've owned cattle my whole life, but there needs to be a future for the kids. And that's going to have to come through new capital. And that capital is not going to be agricultural. It's just not.
That's great.
So were you, I had an old friend of mine from Abilene. Victor Carrillo. Do you know him?
I know Victor well. Old Judge, he was county judge.
Carrillo, that's right.
Yeah. He was at Hardin Simmons actually before that. And he's a geologist by training. A lot of people don't realize. Right. Victor is a great friend.
He's a great man.
Yeah.
Oh, good.
That's funny. Yeah. Now, no, you guys have been great. I mean, if I can, I'd just love, Alan, what advice would you, it's funny, like we Drew and I especially like think of ourselves as like still like young entrepreneurs in the business. And the young part of that is like, has probably the young part of that left at least 10 years ago. But still, we just feel like we've got so much to learn. And so just what advice would you have for a company like ours that's a small business that's out there hustling, trying to be innovative, trying to get it done? Just where do you see all this going, and what advice would you have for me as an oil and gas entrepreneur?
I think I think you're in the right space in terms of the assets that you're buying. Of course, I'm not any expert at any of these things, but I do think that I think it's going to be harder and harder to buy, and I think I think groups like yourself are fantastic because what they do is they get it. And they can consolidate it. And I think that's going to be, you guys are doing God's work with regards to doing that, because especially as minerals get fractionated out, having groups that are going to go buy these fractionated minerals, put them together and make sure that they stay in big blocks is going to be really important with regards to being able to go out and do anything else with them. Because, as you've seen, in your business, oil's where oil's been. And you find a lot in those, those old oil fields, everybody thinks that they're dead, but they're never dead. They always have more to give. They've never been able to extract all of it to begin with, so you have to energize it or what have you. I think technology allows us to go do all of those things. The thing that technology doesn't do, it doesn't put oil into those pore spaces that it never was in.
Right.
And I think you guys fundamentally understand that. And I do think that, we've been kicking around ideas on how can you fractionate interests in such a way that doesn't break up these interests, things like that, so that you can sell pieces easily and cheaply, but it doesn't destroy the corpus. You know what I'm saying? Mm-hmm. But I think the beautiful part about it is that's value that doesn't go away. It's not transient value. It's going to be, for all intents and purposes, in your lifetime, permanent value. And I think you're going to be very happy that you have these portfolios in the future.
Well, from your lips to God's ears.
Sometimes he listens.
All right.
But congratulations. I think it's what a great story. And congratulations to all you guys. I mean, it's the benefit of a team of, a great team is a group of people that, one of my early bosses told me, you're going to always be attracted to people that think like you do. But when you partner up with somebody like that, it's 1 + 1 = 1. He goes, you got to find out what you're not good at and what you don't like doing, and then partner with somebody who's really good at doing all those kind of things. That's when you have 1 + 1 = 4. And it seems to me like you've got 1 + 1 + 1 + 1 = about 25.
Yeah, I can attest to that. They're all very different. The strengths are there. I think that's pretty wild when you think about their trio. I mean, that's I can attest to that. You guys have that
absolutely that
makeup for sure, which is cool. Which is why we love working with you.
I'm already looking forward to that next podcast where you have all three of us in the room. That would be entertaining. But Drew has a sales background, and I learned so much from him.
Yeah.
About building relationships and investing in relationships.
He's amazing at it. I mean, he's so good at it.
He is, and I had to learn, and being generous. He's the most generous person that I know. And Graham is so steady and just so solid. He's the most solid guy. Mm-hmm. And having both of those guys to kind of buttress me and for me to learn from and to augment my skills and help me be a better version of myself, man, it's fantastic.
And think about something you just said right there is, everybody's sitting there talking about how AI is putting everybody out of business. And you've talked about soft skills that are really, really important to being successful. And that's something that AI can't do and never will be. And I don't think people pay attention enough to that. The emotional intelligence, the ability to go out there and work with other people and to be able to, bring people together.
Well, we talk about this almost daily because I've got a kid that's in college and then one that's a sophomore and one's a sixth grader. And Graham has three kids as well. His are still, his oldest is still in high school. But we talk about this all the time and we ask about it. Almost everyone we sit down with, we ask, hey, how are you advising your kids? Like, what should they do? Like, what does college even mean now? And because we're believers that the world's going to change dramatically in the next 5 years, certainly the next 10 years. And so, but two things. I heard this on a podcast the other day. Soft skills, human skills, the skills of just being a good human, like those are going to become more and more valuable.
Absolutely.
And that's just rewording what you just said. And then number two, moving atoms. If you are moving atoms, if your job is to somehow, move this cup from here to there, AI can't do that. And we're actually a long ways away from where robotics can even do that successfully. And so, anything physical is going to have this great resurgence.
Well, somebody told me that robots are going to be great at repetitive tasks.
Yeah.
So if it's moving cups back and forth, that's one thing. But if it's going to be picking up this pen and writing something and then picking up this cup and doing those, that's humans. And the ability to go do that. And I put something out on my X last night about the ability to pick up operated working interests for nothing, because they certainly come with some downside. You have plugging liabilities and all the other things. But if I'd known, or if I'd thought about being able to that I could go buy working interests that had on wells that had a barrel a day, which are break even, you'll never be able to go out there and hire somebody to go just kind of offset that. But if you were willing to go out there and, move out there and go do that work, that's fantastic. And the ability to, when you were talking about moving a barrel a day to 6 barrels a day, but, moving a barrel a day to 2 barrels a day is the first step. And then 2 barrels to 3 barrels is second step. 3 barrels a day relative to 1 barrel a day now is a real company. And the middle class is this very narrow range. We're in this business, we're either really poor or we're doing pretty well,
Yeah.
And it's really hard to kind of figure out how to be in the middle class. You rip through the middle class going one way or the other, But I do think I was kind of joking. I said, maybe somebody should put together a stripper well production camp for 3 months, going out there and training you how to go out there and do the work.
Well, it's definitely a lost art, but there's some folks out there like, I don't know if you guys know Chris Bird up in Tulsa at Tallgrass. Think about friends of mine that are my age, but they chose to do conventional because they saw the underlying value in the actual asset and the actual making of the grease. And he's a great example of a guy who put together 1,000+ net barrels a day. And it all started with just, buying a couple of deals that were, sub 10, sub 20 barrels a day, but just believing in that ability to go out and that a chuck in a truck has to drive up to a well and figure it out.
Yeah.
That's a lost art in the industry. There's a few guys like Chris that are still doing it.
And robots aren't going to do that either.
No. And Cody's doing it. They're doing it up in North Dakota. So.
Yeah, well, that's the reason. I mean, we have a gap in this business that hasn't been filled, and of operators in my age range. There's not a lot of people who operate at my age. There are people who are 20 years old or 15 years older that are still doing it. They're either on, close to retirement and those types of things. And I don't know of any young guys coming up that are doing it. I mean, it's just not a lot of them.
Yeah.
But that's what everybody did in the business. When you started drilling info, everybody was an operator, right? That was what people did.
Yeah.
And so that was a normal thing just to be when I started operating. Same
well,
thing.
and I think that
They don't do it anymore.
And I think being an operator is going to be valuable again. And I do think it's, with regards to, especially as we talked about a couple of weeks ago, there isn't the depth of service companies. The industry bifurcated. It became horizontal and fracking, and it became the old original one. The old original one, all the service companies kind of abandoned that. And so areas that have historically been right in the center of the patch, if you don't have unconventional going on there, you don't actually have services available. Mm-hmm. So now they're deserts. And so now these guys are going to go back to being like what their granddads were. And that means they own their own vacuum trucks. They have their own pulling units. They have their own workover rigs, and they're doing all that work. And that itself becomes value with regards to being able to acquire enough to be significant. It's kind of like Back to the Future.
Yeah, I think you'll see more of it, Cody. I think, especially now, just with the lack of guys doing it, it just creates opportunity, and there's going to be a whole new crop of young guys that step in.
Yeah, and it has to happen, right? I mean, we still have how many rigs out right now? I mean, I don't know, 700.
All of them.
Yeah, we got those rigs out. You have these wells being drilled every wet day, and they're unconventional, and they're going to drill. They're drilling 5 or 4, 4, 6 in a section on a pad or whatever. However they're doing it, all that's great, and that's where the most of the money in our business is. That's where most of your money goes. So you want to be a part of those. That's where most of the operating money goes, but I'm talking about operators like these conventional wells. But these unconventional wells become the same thing, right? It's not like, I mean, they become stripper wells too, whether they're, and that these companies that are drilling these wells, it's not really what their interest is, right? They're growing. So, I mean, our whole industry is continuing to grow this inventory way more efficient than we did 30 years ago. This inventory, though, that's going to require somebody who's not an Exxon, or the majors. At some point, those are going to be owned by someone like me. Mm-hmm. And so, you need more of those groups to be able to do that, because we're still adding inventory at a rapid pace.
80-20 rules still works.
Yeah, exactly. So that's exciting. That's good. I love, Dan. I love this. I mean, getting to know a lot more about you that I didn't know. I do the political thing, which I've heard even more to that. It's pretty cool story. And I'm sure you obviously use those skills to grow what you guys do, because you are out there. You guys are at every event. You sponsor. Everybody knows you. You guys done a great job of becoming a great brand just within our our industry. Like
Thank you.
Yeah, and so I've had a joy getting to know you. So hopefully there's people out here listening that don't know you, and they'll know you more. And obviously, as anybody that's done business with you guys knows, it's great to do business with you. So that's what we want to do, right? We want to
100%.
The more people we can connect with, do business with, the more we can grow and help each other.
Well, we're just trying to learn, with what you and Jeff and y'all's teams have done with Clearinghouse and with Rivery and your operations, and Alan, your history. We're out there having conversations all the time, and every day we can learn something new. And so I'm thankful to get to know you better, Alan. And sky's the limit, guys. So just thanks for the opportunity.
I sure appreciate you taking the time out today to come over here and talk to us. This is great.
Yeah.
And I'm very certain that there's going to be a lot of people interested in this conversation.
Oh, yeah, definitely. For sure. But cool to do a live one.
Yeah, there you go.
Yeah,
got to be a first.
Yeah, that was great.
All right, guys. Thank you.
Thank you, buddy.
Thanks for listening to Crude Awakenings. Big thanks to Kevin Christian for joining Alan and Cody to talk through his path into oil and gas, the growth of Covenant Royalties, and the relationships that continue to drive this industry. Follow the show for more conversations with the people building, funding, and shaping the future of energy. See you next time on Crude Awakenings. Crude Awakenings is produced by Rivery Marketing Group.